Again, I'm from the IAEA. The primary focus of the IAEA, of course, is nuclear. However, the section that I'm supporting, the Planning Economic Studies section, actually looks at all the energy systems, because one of our jobs is to help member states of the UN understand what their energy options are. And for many of them that lack the capability to do their own kinds of assessment, they don't have the tools and the models and such to look at their options, and that's the kind of support we provide. And many times, to begin with, nuclear is not one of the options that they're even considering. So we try to look at a whole range of energy systems and to provide them with the tools and capabilities so that they can make their own decisions regarding what they're going to do in the future. And if that should include nuclear, then we have the capacity to support them in terms of helping them understand what the requirements are for nuclear and how they can move forward with a safe and non-prolific technology. So what I would like to do in this presentation is basically describe maybe some new ideas to you, a little bit new. First off, I'm going to challenge the kind of traditional role that nuclear has played in the energy system and give you perhaps with some new ideas. I'm going to talk a little bit about Fukushima and what its impact has been, especially recently, on nuclear's viability. I'll get into the costs and some of the issues and opportunities with nuclear, and talk about some of the areas of uncertainty, and then I'll try to summarize all this. First off, where does nuclear fit within this energy mix? And according to Ban Ki-moon, the UN Secretary General, basically all energy sources and technologies have roles to play in achieving universal access in an economically, social, and environmentally sustainable fashion. And what that means is basically all energy systems should be on the table. All should be considered. That doesn't mean that they all work for everyone, but they should all be considered, and it should be a level playing field. But to me, it also means that the role that nuclear has been playing within the energy system may not necessarily be the same in the future. And there's several reasons why that might be, and I'll start with one. There's already been a fair amount of discussion of this last day on shale gas. And as we're seeing it, shale gas is basically weakening the nuclear case, and this has been particularly felt in the US, where due to fracking, as we have been discussing, that now we have this kind of bountiful, relatively cheap source of energy that 5 years ago wasn't even, I don't think, being considered, but now here it is. And you can look at over the last 5 years how the cost of shale oil has dropped to below $4 per million BTU. And also, you can kind of understand what this means in terms of the future forecast. The IAEA reference data series, which actually my group produces on an annual basis, we have been looking out yearly at what the low and high forecast for nuclear is projected to be. And I think it's interesting to show that between 2011 and 2012, that if you look out to 2050, which is our furthest horizon, that there was showing some fairly significant difference on opinion, at least, as to what was going to happen with nuclear, where in the low case, it reduced by almost a half, and in the high case, it was showing that it was going to maybe even turn negative. So it could be that there would actually be a reduction in nuclear in the future. But the kind of market that this is reflecting, though, is basically nuclear as it is today as a base load technology. So what I think could be the case is that nuclear may become less competitive for these traditional base load operations in the long term. I don't see that happening right away, but in the longer term, maybe that's not so much where it's going to be. And I'll talk about where it might be in a minute. Also, if you look at gas as a fuel, basically it's becoming cheaper and cheaper. If you look at the red line here, natural gas has gone down to the point where it's near the cost of coal as a fuel, and is still higher than uranium, but you can see the reduction that has occurred. But still, the cost of nuclear in comparison is going to be quite a bit higher, because you're going to pay multiple times more for the capital cost than you will typically for a combined cycle natural gas plant. So even though the costs are coming down, you're still talking about quite a differential with the nuclear. So here's another recognition beyond the shale gas, is what is the role of renewables? And if we look at the IEA World Energy Outlook, you'll see the various projections showing if we were to hit the 450 ppm versus the CPS case, what kind of share would renewables have? And if you look at OECD in Europe, which is the highest case there, it's showing that the renewable share should be above 30% by 2035. And then you look at the other shares, the green share is basically the OECD, then the red is the world, then the green is the non-OECD. So these are fairly significant shares of solar, which is going to be quite a change considering that we're looking generally at an energy mix, in the energy mix where these technologies currently make up less than 5%. So what is that going to do to this energy system? Well, it's going to do quite a few things. And we've already begun to start to see what some of those impacts are. For one thing, consumers are going to be likely to pay more for energy in the future. For one thing, we'll be switching likely to renewables, which could displace the traditional baseload power. And there's several aspects to that. Typically, as renewables hit a level of between about 10 and 20% within the energy mix, the ability for the energy system to absorb the variability is pretty much taken up. So that means the system needs to have new measures in order to be able to now absorb that kind of difference that may occur between demand and what renewable energy is producing. So there's going to have to be different elements added into the system to be able to absorb that kind of variability. And it's very likely, too, that we're going to see higher system costs as a result from needing more reserves for these renewables that will maintain, while still maintaining the system reliability and countering the intermittency of renewables. And my colleague from NEA may talk a little bit about this, but a study that was recently done on the system effects from renewable energy was completed recently, where they're showing that within the system there's an additional cost or burden in order to allow these higher amounts of renewables, and it can range anywhere from $15 to $80 per element in order to have these higher levels of renewables in the system. There's also the effect of climate change mitigation, carbon tax, the use of expensive CCS in countries that are totally reliant on fossil fuels. So where's there a potential opportunity, you may ask, in terms of nuclear? Well, as I see it, there's going to be more and more demand for this balancing energy market, where energy sources of the future will need to be more flexible to be able to offset the renewable energy. And within that might be some roles to use nuclear in new, more flexible ways. And so if nuclear could be used to help balance this variability, that actually it's likely, especially if you consider that the cost for energy may be more, that there might be a niche for nuclear to play within that non-baseload market. Also, of course, we've seen this Fukushima factor, what I'll call it, where a number of things have happened within the nuclear industry that have been affected by Fukushima. There have been phase-outs, as in Germany. They immediately shut down 7 reactors. They're going to shut down all 17 by 2020. Switzerland's 5 reactors they plan to shut down by 2034. There's been cancellations in Japan and in other countries. A number of countries that are fully supporting nuclear, like China, India, and South Korea, they're all taking a pause while they reassess their current systems to see what kinds of additional measures they need to put in place before they restart their units. And we still don't know quite what Japan's going to do in terms of restarts of their existing reactors. So, with that being said, though, what you find, though, is the majority of countries with existing nuclear have reconfirmed their commitment toward it. that basically those that were planning nuclear before, they're pausing, they're reassessing, but they're still planning to move forward, perhaps in a delayed fashion or at a lower rate than what they had previously planned to do. So here's some other effects that we have seen from Fukushima. Basically, if you look at the uranium spot prices in the short term over the first few months after Fukushima in March 2011, you see a drop of about $15 per pound of U3O8. If you look out to kind of where we are today, over 2 years out, it's dropped another $30 or so per pound U3O8. And if you look at the enrichment markets too, that there's similar type of trends that are occurring. So in terms of outlook for nuclear fuel costs, it still looks like with the existing fleet and with the plans to grow the fleets that demand for uranium is expected to continue in the foreseeable future, but the growth is going to be relatively slow. And the current supply of conventional resources could easily last the rest of the century. And there's other kinds of sources that could be turned to if there becomes constraints with uranium. There's thorium. Certainly using the closed fuel cycle, using advanced reactors, could all fill this void in case there's any kind of a shortage with uranium. And as I see it, these kind of conditions should permit nuclear fuel to remain as a low-cost fuel for decades, which is a real benefit of nuclear that not all the other fuel sources, the energy sources, can claim. Now we talk about overnight capital costs, and this is often where the issue is the current reactors that are being built. You see this continuing escalation of costs and times of construction. And I'm not going to debate that that's occurring. It is occurring. But you have to realize, too, that this industry has basically taken time off for about 30 or 40 years. Many of the vendors that have been supplying nuclear components, changed business models. Now they have to re-gear back up. You're having to train new workforces. It's taking some starting pains, frankly, for this to all occur. I think that hopefully after these first units are in place and operating, that we will start seeing reductions in the cost. But you can see what the current estimates are from the EIA and the NEI in terms of new nuclear power builds. They're ranging between about 4,500 and 5,500 per kilowatt electric, which are quite a bit higher than some of the projects that are in construction in US, Europe, and in Asia. A lot of that's because equipment, labor, material costs have gone up since the original estimates were done on those projects. That's just the situation that it is. The alternative estimates, if you look at wind, it runs about $1,000 per kilowatt electric. But keep in mind when you see those kind of numbers that the capacity factor you're going to get from, say, a wind turbine is maybe more in the 25% capacity range versus nuclear runs at 90%. Also, you look at combined cycle natural gas, you're also looking at fairly attractive capital costs. But again, realize that a good part of the cost of what you're paying for energy with a combined cycle natural gas is the cost of the fuel. And if we have shale gas, then maybe that's not a problem. But in most parts of the world, the cost of gas is quite a bit higher. And if history serves again, it can be unpredictable what's going to happen with those costs. So what can be done basically to try to mitigate some of these capital cost expenditures? Well, one that I think a lot of effort is going into is trying to standardize the design. That's something that like the AP1000 is trying to achieve. Countries in the US and others are trying to look at ways to streamline the licensing process. They want to be able to support more efficient construction, and that may be more factory type of construction. We want to be able to reduce the construction time and operating costs and improve the safety and reduce the maintenance costs. Another thing is that many of you have heard probably about basically this negative economy of scales, that if you look at the fleet of reactors that were built in the 70s, you'll see that subsequent units often cost more than the earlier units. And basically what was happening is they were building first-of-a-kind units again and again and again. They never got to an nth-of-a-kind unit. And again, it goes back to having a consistent regulatory process and standardized designs such that you can actually stick with the same kind of design and build multiple units and be able to retain more learning. The part of the IAEA that I work with is nuclear knowledge management, and we're trying to find ways so that as we build units, we can gain from that knowledge, and so that when you go to build new units, that you can then have the prior knowledge to be able to make you more efficient for the subsequent models that will be built. So some of the paradigms for managing these costs, one is to go to smaller reactors. The modular design in a smaller reactor has some advantages. They could be factory built. They are much smaller units. For instance, the one I'm showing here from NuScale is 45 megawatts electric. They could be built, in the case of NuScale, you have 2 6-packs or 12 of them that you could build up to. Other modular designs, you would have maybe 2 or 4. So one of the advantages of that would be that you can add these power modules as you need them and maybe as you can afford them, and you can also put them in, start developing a revenue stream from having that reactor, and then use that revenue to help finance your subsequent reactors. So that provides a little bit different scheme for how you would finance a reactor. Also, modular construction, that's been going on for some time, like with the CANDU reactors, but others, again, like the AP1000, are trying to use the same kind of idea where, as much as possible, where you can build subsections of the plant in a factory in a consistent, standardized way. You try to do that, then you bring it to the construction site. So you're building less and less actually at the construction site. Another, I guess, key issue with nuclear power economics is the financing. As I think was mentioned earlier, the finance costs are a very big part of the costs, and nuclear has very high capital costs as compared to other energy costs, although renewables have a bit of the same problem in that you're having to pay for the capital investment all up front, and then basically your operating costs are pretty small, and that tends to be the case with nuclear as well. So the costs are very sensitive to the size of the investment, its duration, and the rate, of course. And the rate is basically a reflection of the risk. So if you look at a typical reactor that's, say, 650 megawatts electric at a 10% interest rate for 7 years construction period, you're paying an overnight cost around $6 billion. And out of that, you're paying about half, about $3 billion, which is about a third of the total cost with the IDC for the interest during construction. So it's a huge cost. And so, again, if you look at some of these modular reactors that are maybe closer to a $1 billion price tag for the initial module, then this might be more palatable for many markets to be able to accept this type of finance. Finance is really about risk allocation, and it's about minimizing the risk to the lender. It's about, how best to, in the case of default, how to share that expense with others. So this is a very tricky game, and it's not just for nuclear, it's for all these big projects, how the finance is going to be done. The lenders currently are facing some new challenges in terms of shrinking asset base, how much money they have to lend, and the liquidity coverage ratios are getting tighter as well, and that's going to make it more difficult. And what all this means is basically banks may play a lesser role in the financing of nuclear plants in the future, and other things may need to take up the slack. Some of the kind of innovations that have been used to an extent or are beginning to use is this build, own, operate model. This is the way Rosatom is pursuing their type of sales external to Russia, like with Turkey. Export credit agencies are also becoming more flexible in terms of providing joint funding for different projects. These contract for differences can help safeguard nuclear development returns, and that may be an option in some cases. Then there's vendor equity, which gives vendors a share in the future project's incomes. So that might be an enticement to help change the economics here. And also, waste contracts can take the sting out of the back end, basically, by providing a guarantee on what the maximum would be for the cost for the final disposition of the high-level waste. And that may provide some opportunity as well to reduce cost. But uncertainties still remain. There are still the post-Fukushima safety requirements. Within the EU, this could be in the magnitude of 200 million euros per plant. In the US, I think it's more like 35 million per plant to be able to put in all the features that are being considered. So there will be some uncertainty from what that's going to mean. There's still regulatory uncertainties for new plants in terms of siting criteria. Are they going to be tougher now because of more concerns about the type of natural disasters that could occur? The global exploitation in shale gas, we'll see how that goes, if it's limited to the U.S. or if it's expanded beyond the U.S. What the success of countries' conversion to greater and greater renewables is a real question. How easy is that really going to go? If we look at the case of Germany, we can see that there are some pains there already. Where they're at 22% renewables, we're seeing how they are now having to realize, well, we need to put about 4,000 kilometers now of more transmission system in. We need to now switch to some other kind of backup power, which is typically fossil energy, to support the renewables. The consumers within Germany are finding that they have to pay higher amounts for their energy. I think they pay something like 40 to 50% more than the EU average for their electricity because they're having to pay for all these additional costs. Also, we're looking at the future tax on carbon emissions. How is that going to play into this, as well as the financial climate? But fundamentally, as we see it, there is a basis for nuclear. It continues to be a clean, low-carbon source of energy. For many countries, it's part of their carbon mitigation strategy, and it's a hedge against fossil fuel price volatility and provides energy security. These are the reasons why many countries have used nuclear in the past, and it continues to be the reason why future countries will use it. So with that, I'll conclude. Nuclear is a sustainable energy source supporting the need for universal access to energy and reduction in energy poverty. There are economic challenges and uncertainties that remain, but there are some financial innovations that can help change this game. And the market fundamentals are still behind nuclear. Okay, thank you.